Good day, traders. Probably more than a 1 minute mindset reset today, but we'll talk about some of the questions and scenarios that came up this week. We'll talk about just some different things regarding tactics and approaching the market, the process. Today we had retail sales, I believe it was. I don't even know. It was 3 days of major red news. And we had markets that gold, euro, in large rectangles from the previous 2 weeks. Gold's been coming down since the beginning of the month. We've had US dollar cross pairs moving upwards. Indexes had moved upwards, and for the most part the last couple of days consolidated, but we're up in the indexes from the lows of the month. And as I've mentioned before, when we get into markets like this and it's a waiting game of patience, and when there's uncertainty about, number one, how the markets will react to the news, I step right back. And my go-to setups, as I said yesterday, are first bounce, if there's an explosive move, or low-hanging fruit, which is just the trend continuation trade. Now, I've got a lot of questions. I've gotten a lot of feedback from traders who are frustrated, finding it difficult, and I've got a lot of feedback from a lot of traders who are finally seeing the bigger picture. So when we get into a week full of major red news, and we have a Monday with no news, and we have 3 days of major red news, you have to already be thinking to yourself, 4 days. So initially we can get an opening range and initial balance, which establish our highs and lows for the week. Now, I'm going to go over this in one of the future videos regarding the highs and lows if we're inside of previous weeks, because traders are calling day counts inside of previous weeks, and there's been no false breakout of a weekly high or low. So that's important to understand. When you're trading inside, you're not identifying the best candidates. The markets that breach levels and fail, that's where we want to initiate our day count, because now we can establish a thesis that the market may be heading over to the other side of that range. Now we can get situations as we did with the euro. The pound broke out of a weekly high and it failed at the high before moving downwards to the low of the week, the low of the month. The euro broke out of the opening range and pinned the high of the week. That is not a failed breakout of the high of the week, but it is a failed breakout of the opening range. Now, just to clarify, I had traders disagreeing with the day count and everything else. Regardless of day 2 or day 3, Monday, Tuesday, Wednesday, it's still the same trade setup. So there's no point, disagreeing over that when it's a high of day to low of week trade setup. That's a low-hanging fruit, high of session in the US. Just little things like that. And what I'm trying to encourage with traders is to step back and understand the bigger picture so that you can identify the easiest, best trade setups. Today I took first bounce. Think about this. We have markets that are moving down from the high of the week to the low of the week, high of the month to the low of the month in some pairs, or they've already moved, as we saw in the indexes. Now, if that after that major news, they take traders back down to the low or up to the high on the US dollar crosses and close up there, that's 1 hour up. And we have day 3 breakouts on the Japanese yen, the Swiss franc. Think about that. 1 hour up, New York opens, the second hour pulls back. We can get another push back up in the third hour. You've got to be thinking 1, 2, 3. In terms of how long it will take to potentially reverse a market. If after the news it hasn't exploded and broke down or anything else, it's going back into the same trend direction. So what they're doing is they're taking traders further into the trend on the news. Now, that gave a couple of really great setups. Japanese yen, day 3 breakouts, it broke down, reversed. Not huge, but that could be the beginning now of a day 1 count at the high of the week. What I'm trying to get across is that traders are trying to get in right at the high or get in right at the low, trying to buy it. You're buying a falling knife or catching an exploding rocket. Give the market time to break down and retest before it rolls over. Go to page 107. I mentioned this to another trader, some excellent questions. Most stop hunts are 25 to 50 pips. So we had a range on the yen that auctioned down from last night's US session. 3 levels of drop: US, Asia lower, London lower, and then that formed our new high of the day. They went 25 to 50 pips above that, took out the high of the week before consolidating. That consolidation was 30 to 35 minutes before it collapsed. So understand, we're not just trying to sell something at the high or buy it at the low. The pound was a textbook perfect setup for a first bounce opportunity. We're on day 3, except that they auctioned upwards away from the low of the day, the low of the week, in 3 levels from last night's low of the day, yesterday's low of the day. 75 pips from the low, almost to the pip. Same with the Japanese yen, 75 pips down from high to low, from yesterday's high to today's low. 3 levels of drop. So there was an opportunity to enter long on the news on the first bounce on the yen, and an opportunity to enter short on the first bounce on the pound. They brought it up 3 levels on day 3 away from the low. We have no volume trapped underneath. We know that there's no new weekly day count starting yet. There's no false break. So a lot of people are overdoing their analysis. You have to step back and be looking at the simple trade setups. If you have major news, then don't trade. Don't trade until after the news, and then go back to your original thesis. If there's no massive explosive reversal candle or anything else, now we could have had an explosion today that went against gold and started going up outside of the range, then I'll look for a first bounce in the reversal setup. But we didn't get that. They took traders down before lifting the offer and then continuing the move down 75 pips from the low on a first bounce entry back into the low. No false break volume below the low of the week yet, so we know the day count isn't going to start yet. That first bounce trade broke through the low, consolidated, and then the third hour began the march back upwards to take out the high of the day. So think about that. 1 hour down, New York opens. They break structure, consolidate, traders down low. Third hour opens for the short squeeze reversal, and the market takes out the high of the day. So it takes time to reverse big moves. If the news didn't do that, then start thinking 1 hour, 2 hours, 3 hours. So there's a lot of little things, and some traders think, oh, there's 1,000 things I need to learn. No, you need to step back and look at the big picture, not the inside. The inside is where you're going to get all chopped up on. So just because it's a day 3, we still need to have a setup. If it's day 3, you don't just get in at the high or the low. You need to have a setup. And the universal criteria in the playbook on the 5-minute entry protects you. It protects you from trying to sell the high or buy the low on the front side against the grain. Let the market lock in the high or lock in the low, and then calmly enter the market, put your stop in place, and lo and behold, as awkward as that is, you're taking a position in the market, you're managing your risk, you're placing a profit target, or you have a trade plan to manage your profits as they progress. That's trading. That's as simple as it gets. Everything else is in your head. The reason why a lot of trades are counterintuitive is that's how they're built on. They're built on your fear of getting in. The ones that seem easy are the ones you'll get stopped out on, because that's the trap. So, I try to convey it as simple as possible, but if you're struggling, step back and observe. Pay attention to the clock. Understand who is in the market. A day 1 does not mean there are breakout traders in the market. So a day 1 failed breakout that starts our day count does not mean there are breakout traders. If we get a day 1 at the low of the week heading back up, but they haven't taken out a daily high, there's no day 1 breakout traders in the market. When you get three levels of breakout traders in the market, now that market could potentially be running out of steam. But we don't get in front of that move. We wait for the market to set up, lock in the high, give us our entry, put in a profit target, lock in the money, and get off the screen. So, I don't like sitting around for 4 or 5 hours. The first bounce is the easiest opportunity for me to take. One trader asked a great question. You don't post any of your losing trades. Well, I as I told him, and this is straight talk. I didn't like taking losing trades, so I stopped taking them. That quote that I put in the playbook about the weak and dying antelope, if you're getting in on the front side of the move, you're getting in front of a charging antelope until it is wounded. So I hope that makes sense. Backside, backside, backside. Even if you're in a 90-10 opportunity and it doesn't go, you should be able to get out at break even or even with a small profit. And if you're sitting holding on to that and it's not accelerating or breaking into profits, then there's a problem. So as I said, I don't sit around. I've done this long enough. These should go. If they don't go, I get out. So hopefully that makes sense. Don't overcomplicate things. That playbook is written out very simple, very simple. So understand the big picture, know where your weekly highs and lows are. Don't look for day counts to change inside of a weekly level unless you have a failed opening range. Study that. If you're not sure what that is, don't trade anything. Go study it. Understand what the opening range represents to the new week. So keep it simple, traders. We'll map out some of these in more detail. Simple, simple, simple. Go back through my community posts. Those trade setups are all the same. 3 levels of rise, lock in the high, consolidation, short trade. Same thing for a long. Everything is a pump and a dump or a dump and a pump. They dumped it down on the news on gold. They locked in the low. Third hour kicks in. The reversal started. Low of the week, low of the month. Not quite the low of the year, but low of the week and low of the month. Low of the day. So you've made it through a tough week. Whenever there's major red news, this is the type of week that can happen when you have a scattered amount of major red news across the board. Think in your head. Look at the big box. If they have that much news on the calendar, there's going to be manipulation. Step back, wait for easy trade setups. Keep it simple, traders. Less stress, less screen time. Make it simple. Paul Tudor Jones said it best. Why make trading a pursuit of misery? Make it one that, makes you happy. So look for the easy money, look for the low-hanging fruit. Keep it simple. Have a great day. May the markets go with you.